All right, welcome to The Explainer. Today, we're going to crack open one of the most powerful and, let's be honest, mysterious forces in modern finance, the Quant Fund. So what are they? Who are the brains behind them? And how in the world did they come to dominate the markets?
All right, let's just jump right in. When you boil it all down, investing is really a tale of two completely different approaches. On one side, you've got traditional investing that's all about human judgment, gut feelings, maybe a little emotion. And on the other side, you have quantitative investing, which is driven by cold, hard data, mathematical models, and algorithms. And that right there is the central battle we're digging into today. Can a human's gut feeling really beat a machine?
So this leads us right into our first big idea, this epic showdown between human emotion and the algorithm.
This one quote really gets to the heart of why quant funds even exist. I mean, think about it for a second. Traditional investing is totally at the mercy of all our human flaws, right? Fear, greed, panic, getting a little too cocky. Quant funds? They were designed to be the antidote to all of that. A system built from the ground up on cold, hard rules, not feelings.
Okay, so if they've taken emotion out of the equation, what's left? What's actually powering these things? Let's pull up the curtain and take a look inside what people call the black box of how these funds really work.
All right, so what is a quant fund? It's actually pretty straightforward. It's an investment fund that uses systematic, data-driven methods for all of its investment decisions. And that word all is super important here. There's no human manager who can just step in and say, you know what, I have a hunch, let's do this instead. Nope. The model's rules are law. So what does that look like in practice? How do they pull it off? Well, it all kicks off with these systematic, data-driven methods to spot patterns in the market. Then, they use complex mathematical models to actually define those patterns. After that, they employ statistical techniques to test them to make sure they're legit. And finally, the whole thing runs on automated algorithms that can fire off thousands of trades without a human ever lifting a finger. Now, you might be thinking, okay, that's interesting, but this is probably just some small niche part of the financial world, right? Well, think again.
We're talking about more than $2 trillion in assets under management. That is a staggering number. So yeah, this isn't just another player at the table. Quant funds are a massive, dominant force, and they are shaping how money moves around the globe. Every single second.
But wait a minute. This brings up a really interesting question, doesn't it? If everything is so automated, what's left for the people to do? Let's talk about the minds behind the models.
Exactly. I mean, think about a self-driving car. The car might be driving itself, but someone still had to design the engine, build the car, and crucially, write all the software that makes it run. Well, in the world of finance, that person is the quant.
And a quant is not your typical Wall Street suit. They're this incredible hybrid, a blend of a mathematician, a computer scientist, and an engineer all rolled into one. See, they don't just sit there and analyze markets. They literally build the complex machines that do the analyzing for them. So what's in the toolbox of a quant? Their whole skill set really boils down to three core pillars. First, you need that deep, deep mathematical and statistical knowledge to even understand the theory. Second, you gotta have expert-level programming chops to turn all that theory into working code. And third, and this might be the most important part, you need this incredible, creative, and innovative way of thinking to find those brand new strategies to spot an edge in the market that absolutely no one else has seen yet.
And just to be clear, we are not talking about being good with Excel spreadsheets here. Oh no, we're talking about some seriously heavy-duty stuff. Think probability and stochastic calculus, linear algebra, econometrics, and being fluent in programming languages like Python and C++. These are incredibly high-level, specialized skills, and they're all pointed at one single goal: building and backtesting profitable trading models using just immense mountains of historical data.
So yeah, it's probably no surprise that the barrier to get into this field is ridiculously high. The vast majority of people working as quants have advanced degrees, and a whole lot of them have PhDs in fields like physics, mathematics, or computer science. They've literally been trained to create models for complex, chaotic systems. And it doesn't matter if that system is the universe or the stock market.
Which leads us to our final section. And let's be honest, it's the question a lot of you are probably wondering about. With all of this brainpower packed into one industry, why on earth do quants get paid so well?
Okay, so what's the deal with the huge paychecks?
It really comes down to a very direct link. See, in most jobs, the connection between someone's talent and the company's profit is kind of fuzzy, right? But not here. Here, it is a dead straight line. Better technical talent leads to better trading models, which leads directly to more profit for the fund. It's that simple.
And when I say direct, I mean direct. A senior trader or quant's compensation can be anywhere from 30 to 50% of the profit and loss, the P&L, that their models generate. Just let that sink in. You build a system that makes the fund $10 million, and you could personally take home $3 to $5 million of that. Your performance is perfectly measurable, and the rewards are just astronomical.
So if we're going to sum it up, it all boils down to these three things. First, it's a pure meritocracy. All that matters are your results. Second, the demand for this unique, rare blend of skills is through the roof. And third, as we just saw, there's that direct, undeniable link to the fund's profits. You put those three things together, and you've got a perfect storm for insane compensation.
And honestly, that meritocracy aspect is a massive draw for the best and brightest minds. It creates this environment where the best ideas just win. Your success is based entirely on your knowledge, your talent, and what you can actually build, not on who you play golf with or how good you are at office politics.
You know, when you step back, this whole thing is about way more than just finance. The Quant Fund, this system of data-driven, automated decisions all built by a team of elite experts, it's really a blueprint, a model for the future of so many other industries. And that leaves us with one final big question to chew on. As these algorithms get smarter, faster, and more powerful, which industry is going to be transformed next?